Hello, welcome to our podcast. Today, October 5, Tuesday, 10:30 a.m. here in Brazil right now. Okay, so in UTC, we're talking about 1:30 p.m. And let's make the daily analysis of Bitcoin prices as negotiated, traded in Tether in Binance once more. So what we see here, the trading range is apparently breached. Now, this can be a false positive or not. What's a false positive? It's when it breaches, but it comes back inside. So why that will happen? Okay, so just to make clear, we are seeing a trading range in this region here. So nominally we are above, and where is the bottom of this trend range? Of course, in the bottom here of the move. So we see a trading range between these two limits, quite far. We're talking, say, 40, 48. Okay, now we are in 50, so we're above 48, so we're outside the range yet. But can that be a false positive? Well, we believe it is. Okay, so far we still are not convinced that this breakout is true. Why? Well, let's see here. First, the volume. Okay, so unless we're very much wrong, something that is very much possible, the volume has been decreasing as the price has this skyrocket up and then continue in a steadfast pace. So as far as we continue climbing up here, the volume remain ordinary, which means less than the average in the last 200 days. Like if it's going up, if it's going to the moon, why aren't people buying it? You know, they are buying it. It's going up, but why not more? Why we don't have things like this? Okay, why don't we have volume columns like those ones here? Why it is that meager volume? Well, it doesn't matter. Of course it matters. If it's really a good deal, why not to be in? That's why I'm cautious, I'm suspicious. And you know, we can go on together with suspicious minds, says the poet, okay? So our mind's still suspicious and we believe there's going to be a return to the moving average, this ochre, orange, light brown, whatever you want to call it, line. Okay, now let's see why. First we go to the 1 hour move. It kind of gives a zoom in what's going on and it explains better. So we can see here in the chart that since this day here, which was, let's move there, on 1st October, okay, since this day, the volume fell drastically, except here. Now, something must be pointed out. When we do have a sequence of candles, same color, adjacent, so all the same color, no breaks between ups and downs, they're all green or all red, you can add up their volume as one column, but you need to give a percentage of discount. Okay, why is that? Well, that's what we call a low frequency move. Okay, this is a high frequency move where the energy or the volume is concentrated in one candle. But when you have adjacent candles, you can add up the volume. So this block here is somehow the same as this one, okay? However, it takes more time to produce its effect. Why? Because it's low frequency, it's happening slower, so it unfolds slower, okay? Not at once as this one. So this is something to consider in the analysis. So a strong move might happen at once, or it might happen in intervals. For you to have an idea, it's the difference between a punch or keep pressing it, okay? Both might yield the same energy, but one delivers this instantaneously, which is this case, and the other keep delivering it over a period of time, kind of like that. So it's kind of a physical metaphor to explain a purely digital event, which is trading, okay? However, that's how we see it, okay? It's our bias from engineering, it doesn't matter, but that's how what we see here. So let's dive a bit in the chart. Right now, the volume is decreasing, although the price still kept going up. We're horizontally now we have flattened here, but we still have not had any selling pressure. So we believe that no selling pressure here so far since we have this spike up. So we might continue flattening for a bit until we have another spike. And then once we will trigger the selling pressure, when it's going to be, how it's going to be, well, guess what? We have no clue, but we believe it's coming. And when it's coming, we have a guess where it's going. You see that the 200 moving average in 1 hour, it's moving up. Here's 47. So when it reaches between 47, 48, we might, yeah, might is good, right? But that's variable income, right? It's always uncertain. We might have a trace back to the moving average. So we believe that this line here, once it crosses this line here, we'll have a pullback to it. That's our blind guess, okay? Why? Well, because we have had traces back to this average. It kind of worked as a guide here. Because of the scale, it looks diverging, but it converges to it, and it has been away from it quite a lot. However, as long as the prices remain above it, it keeps the moving average keeps converging to them, and eventually the prices then collapse to the moving average. So it doesn't mean there will not be overshoot, like to cross it down here and then move up, but it tends to converge to the average. Okay, but that's not my conclusion. That's Gauss' conclusion, Johann Friedrich Gauss, I don't know, 600 something. So that's our main point for today. Let's go to the daily chart again and see what else it's telling us. Okay, so basically, I have this figure here. I don't like to let it on. So volume is decreasing and still have not had selling pressure. Okay, so we might keep going up until our top here on 52. Until this level, we had triggered the selling pressure that took us right back to the moving average of daily. Okay, we were before in 1 hour chart. So we might experience something similar. It might be triggered at the level or around it. Okay, but however, if it passes this level and we still have not had a trigger, we might spark short squeeze, because you might have a lot of short positions around this value, potentially a bit up. So passing through it, we might force those sellers to cover their shorts, and that will give a spike up. So that's something to be cared about. Then I'm absolutely wrong. It took me time, but I will always be late in recognizing I'm wrong. Okay, and if you allow me to mention Stanley Druckenmiller, I will go to my grave, often wrong, never in doubt. So by now, I'm convinced it's a false positive. We are still within a trading range, although the prices are already above it. But I believe we're coming back, and we're coming back hard. When? Well, we're already in borrowed time, but we might still continue up. However, if we cross this point, as the squeeze goes, I admit I'll be wrong. Till then, I don't. So that's it by now. We need to keep observing other indicators. Now we're about to end this analysis, and I'd like to show you HYG, and it's falling, and that's quite interesting. Okay, now this is not Bitcoin, this is the corporate bonds investment grade. We're falling, and the selling pressure is rising. That's very interesting. Like, if things are so good, why credit is not booming? Okay, and if we had an amazing recovery, why haven't these bonds made new highs since 2016? We're still in this, below this range here. Here is 2016. Why we have not made new highs? Okay, comparatively, let's have a look at, let's have some fun. Okay, let's compare with SP 500, SPX. Okay, So Y1 goes crazily up. Okay, let's see here from where to where we went. We went from a bottom in below 2000 to above 4000. So we more than double. Whereas here we barely made new highs. And let's get the exact period of highs here. So we went from 2500 when we were at a high here to 4400. We reached 4500. Okay, so we went 90%, 80% up in the SP 500, whereas we never crossed that high afterwards in HYG. Why is that? If economy is so good, why the debt titles, the bonds, do not improve their value? Well, the answer is it's full through debt. It's a debt economy boom. You borrow money into existence, and who knows? No, everybody knows this money is never going to be paid back. So that's why the bonds cannot raise value, whereas the place where this money goes never stop rising, except for few moments that are now long gone in the past. So that's it. That's the reality. And we believe that in this environment, Bitcoin is poised to go down, because the same pool that rose SP500 is fooling Bitcoin. Doesn't matter what you think, but where do you think the institutional money comes from? It comes from debt. It doesn't come from labor, from hard work. It comes from debt. So as the debt becomes poised, so is the source of funding for the prices going up. And that affects also stock buybacks, which is the greatest stimulus and the greatest strength behind the SP500 growth. So it's a matter of time until all of these blows up. Again, that's why I believe that Bitcoin is still in a trading range, even though its price is up and outside. Okay, I don't want to be too pessimistic, but I need to speak my mind, and that's our point. So in our next video, we want to show you another tool that we use for analysis. It's not just moving average. We will show you how we read through Ishimoku Cloud. So if you're interested in it, stay tuned. And that's a very good indicator for the current trend. And as a spoiler, we're not in an uptrend in Bitcoin in daily chart. With that's one argument. It's not a rabbit in the hat, okay, that we just pull out for the continuation of prices moving up. So thank you very much for your attention. Thank you very much for your audience. If you like this video, please share this to your friends and give us some feedback on how we can improve our analysis. We love to deliver to you the best information in the way you like the most. Bye-bye.